Sunday night, December 2nd, 2018, taking a look at the S&P 500, but we're going to start off by looking here at the ES. So here we are, this big blue box here. This is the gap that we've left on the open here with Sunday night futures. ES closed at 27.64. Here is where our bell was with the S&P 500, so you can see there was a little bit of a buy program after the bell, taking it all the way up to 27.64. And in terms of translating that to S&P 500, that would have been a close above the 200-day simple moving average. And we gapped up open about 30 points to 27.93.5 and have sort of moved back off of that. The halfway back point of the opening range is 28.5, and you can see that we were holding above that, but now in this last 15 minutes, it looks like starting halfway back point of the opening range. If it were to go down, I would be looking at obviously the open at 20, getting into this area where we're filling in the gap. The halfway back point between this high and the gap so far would be the 27.8675 handle. So, I would be looking for this 27.86 to hold us if, say, 2800 goes down. You can sort of use the 80 handle rule to remember that. If 2800 fails, let's look for the 2780s to hold, and 2786.75 would be the halfway back point of this whole move from the close to this new high that we put after the open tonight. So we'll see how that works out. But let's go and translate what has happened so far tonight over onto the S&P 500 chart. Here is the gap map. Here is where we closed on Friday. Here is where the high on ES so far has printed. So we would have passed through the 200-day, the 50-day, and filled both of these gaps. So all of this cleanup work would have been completed. These are gaps that were left on the way down after rolling over off of the November high. So we'd be trading right up in here right now, and dipping and sort of rolling over and dipping back down inside of this gap right now if the regular market were open right now and not just futures. When we look to the left and see what happened at the November high, we had a lower high than what we made in October, but a higher closing high. And I always thought that that was a very, very bullish signal, and that's why I went out that week long some calls, thinking that we would over that weekend, thinking that we would be, doing well because we'd be entering into a nice uptrend, and then I didn't hedge them, and I wound up regretting that. So I brought home some calls this weekend, but I hedged them completely. So I'm going to be definitely capping my gains on those, but I had the peace of mind tonight knowing that I didn't have, an $8 call at stake. I had about 20 cents worth of that $8 call exposure because I sold a call behind that to make a long call spread. And with that little move up and after the close on Friday, I was able to get a credit that was big enough to almost completely cover the cost of what I bought the long call for. So I'm going to do fine with that either way. If the worst case scenario is that we roll over and we lose all of those gains overnight tonight and open down for some reason, then the most I would lose would be 20 cents or $20 per contract. Anyway, that's enough about that. Let's focus back here. I think that these gains are probably going to hold just fine. This little gap area here, if those gains hold and we open right in here in this gap area, then maybe what we're going to do is consolidate here for a while and work on moving above the November high and the November closing high versus the 100-day simple moving average at 28.15. If this area goes out, then we have these two gaps to fill up here. And then this other chart sort of comes into play, this new chart that I made for you guys. This sort of explains how, last week we gapped up open coming into Wednesday when we were waiting on Powell to speak. And we gapped up open on the 10-day simple moving average. And once Powell got on, we blew on through the 20-day simple moving average and just about almost doubled up the range on the day from there. So I sectioned off this area between the 10 and the 20 days as one section of the market that we traded. And then we followed through on Thursday and Friday, trading above, at least in the upper half of Wednesday's range to up above it. and that is the area between the 20-day and the 200-day. So that's sort of like section 2. Then I figure this area that's between the 50-day and the 200-day, this is an area that's shrinking, that's going to be shrinking as each day goes by, because this 50-day is going to cross down through this 200-day. I thought, well, we would gap up, open over that, and then be working Monday and Tuesday to work our way up through here to get to this 100-day. And as you can see tonight, we gapped up, open, and we're already there. So if we make more progress even before the open tomorrow, then obviously we're going to be working towards filling these two gaps. But ultimately, I'm looking for a double up of this whole move that was made from 2603 to where we closed on Friday, right underneath the 200-day simple moving average. And you can see how the top of this box just really is sort of bordered by the 200-day simple moving average. So it just would be a double up of this move, and that just happens to take us perfectly right up here, right to this last gap up here in the 2900 handle, 29.19 to 29.25. So if that move were to completely be fulfilled between now and whenever the Santa Claus rally completely does itself out, that will have been a double of that move. It could not even make it this far. It could surpass this. Maybe we even go up here, fill this gap, and don't quite make a new all-time high and roll over from there. Or maybe we are going to be going on and making a new all-time high. I don't know. All I know is that in trading options, I need to have some different ways that I can put my hands around this by way of filling gaps, or maybe doubling a range and working together with the simple moving averages, so that I can put together a winning strategy each week on what strikes to take and when to switch, and when to switch to puts from calls, and so on and so forth. So let's take a look at the 5-minute chart. In terms of the 5-minute chart, if we were to open and work our way right to where the ES is working right now, we'd be right up here, right up at the top of this gap, working our way towards this current closing high. That closing high in November is the post sell-off closing high. Since we've hit that low at 2603, the highest close we've ever seen was that 2813.89. So that's going to all be, at stake tomorrow, it looks like, if these levels hold from ES that we've seen print already. I would say that if we gap up, open, and we are holding above 2800, certainly be looking at calls up here. This might take a couple of days to get through, and then the market's going to be closed on Wednesday. But if there's enough power in the market to get us through 28.15 and go back to the daily chart and look where those gaps are, and pick out your $5 window or your $8 window option strike. That's what I would do, and work at it from there. If we open in the morning and we start to fade, you're going to want to be looking at this 27.94 level to hold us in place as support from 2800 on down through 27.94. We're going to want to mark a halfway back point for the opening range, and we're going to want to know where the halfway back is from the high that we make after the open tomorrow to the close. So just like those levels that I showed you on ES. And one more time, I'll take you back to that and just remind you what the heck I'm talking about here. Right here. This was right away I marked the halfway back of where the high was made to where the open was. And then from that high to where the close was on Friday, marking another halfway back point. And if this first halfway back fails, then we look for the open to hold, and if that open fails, then we look for the halfway back point. So you'd be looking at the same thing on the S&P tomorrow, and I would say that this is still a dip to buy unless we get all the way down here, and it looks like we're going to fail the 50-day. If you are strictly a seller of this market and not interested in buying any dips, just know that these are strong supports and that you may only get a scalp out of things. Obey your edges. If you get a nice swing up here that fails to make a new high or make it above the 100-day, go ahead and try some puts, but realize that the 2800 handle is probably very strong support. So if you're going to come up here and you're going to buy Wednesday expiration 2700 puts and expect those to be a home run, good luck with that. That's just not what's going to work right now. You got to stay close to the money and be realistic in your expectations for both the upside and as well as falling back to the downside. We're in that seasonal rally mode right now. This uncertainty has been lifted from the market. The uncertainty of Powell, the uncertainty of the G20, and temporarily the uncertainty with the tariffs going up to 25% on January 1st. We know that that uncertainty is removed. I still think that we're going to go back to our lows that we talked about in the videos that I put out in October, that 2480 to 2460 level. I still think that's going to hit, but I don't think it's going to happen until, if it's going to happen at all this year, it would probably be an event centered around the Fed. Let's take a look at the calendar before I stop the video, in fact. Okay, so here is this week. Okay, manufacturing PMI from around the world's coming out tonight, one country after another, culminating in ours at 10 a.m. And we have multiple Fed speakers tomorrow. We have no data on Tuesday, but the Fed, Williams of the Fed will be speaking at 10. Wednesday, the market is going to be closed in remembrance of President Bush. And there was a lot of stuff that was scheduled for that day that I guess is not going to take place. Powell testimony, the non-manufacturing PMI, and the Beige Book were all coming out on Wednesday. So if that's all going to be moved over into Thursday, well, guess what? We have Powell speaking after the bell, and then we have non-farm payrolls on Friday. So there are a lot of things in here that could slow down the advance, but you know, it is what it is, and this is a gap up of 30 points. And this is a huge gap that's not going to just fill in one session. And you can see already, it looks like even just the halfway back on down to like the 2800 handle in general seems to be finding buyers. So that's what's going on there. And then I just want to say one more thing, though. There's a lot of stuff going on in Europe right now. So let's see what the Europeans do when they come in tonight. The 3 a.m. crew and the Europeans, that you know, they are trading around. The 3 a.m. crew is my nickname for the people that come in and hit ES, and also can start trading S&P 500 options if they have the special permits to do so. And you often, especially after an event like the G20, there might be a lot of volume moving in those options tonight from 3 a.m. on for those special permit holders. There's a lot of stuff going on in Europe. I was going through my news feed this weekend, and I saw that there were riots in the streets of Paris over the weekend. There were shots of streets lined with burned out cars and things like that. Some big protests and some harsh stuff going on in Paris, and then over in the UK you've got Brexit happening, and there's this back and forth that we may or may not see a clean Brexit deal. And Deutsche Bank is blowing up. I even saw in the news feed that Donald Trump is getting tied into some things through Deutsche Bank as well. So and then of course there's the whole Mueller investigation. My God, all that going on. So anyway, I mean, you can hear me like rubbing my forehead and wringing my hands as I'm saying this in the video here. There's a lot going on that could push this market off of its high horse. But for now, trade what you see, and what you see is a 30-point gap up. And as long as this gap support holds, the path of least resistance is to the upside, and ultimately we could be looking to go all the way up here and fill in these gaps, if not even just to play for a clean double of this move that we've made from the sell-off low to where we closed coming into the G20. Okay, so that's it. I hope this video helped. If I confused you or left you wondering which way is up, just give me a direct message and I'll get back to you as long as it doesn't get to be too late tonight. Thanks for listening. Good luck and good trading. Have a good evening.